Good morning, everyone from Hong Kong.
Yeah, and good evening, everyone from here in Toronto. Welcome to this off the fifth in our series of interviews with portfolio companies. It's great to have Yat Sui with us today, who's the founder of Animoca Brands, which is one of the global leaders when it comes to blockchain gaming and NFTs, which is obviously a very, very kind of hot space at the moment. Our funds 1, 2, and 3 have all invested into Animoca, and we're really excited to have Yat on today.
Yes, perfect. So, yeah, let's just jump right into it. Could we start with a kind of 2-minute type of elevator pitch type of introduction where you introduce Animoca and what it's all about, and thereafter we go deeper into it.
So maybe the quick pitch is Animoca Brands is a company that is focused on building the future of how we live, play, and work, and we are doing this basically through video games first, because most of the world is actually playing games, but they don't own any of the digital property rights. And the way we're doing that is by delivering these digital property rights to gamers worldwide and eventually to everyone. And this is through NFTs. Basically, that's the elevator pitch. And we do this by building various metaverses, as well as investing heavily in the space to help build up the ecosystem.
Perfect. Well, so Animoca houses a collection of companies, and it would be great to understand the people behind it. So could you start with giving us a little bit about your own personal background? What did you do prior to Animoca, and what led you to the foundation of Animoca?
Yeah,
and
sure.
So
a couple. So first of all, myself, I've actually had a fairly long journey in the tech space. I've been in the space for over 30 years at this point, right? My first job was actually with Atari in the 80s. There's a funny story around that because that was sort of pre-internet, and I actually wrote a piece of software that was that ended up being I ended up distributing in what was at the time CompuServe and eventually Genie, pre-internet type of communication services. And like kids do at the time, we just put a little thing in the back and said, oh, if you like the software, then sort of send me a check to this home address, privacy be damned, right? And of course back then I wasn't expecting any money at all. I was just like, we just do it for bragging rights. And then a few months later, I started receiving checks in the mail, and I didn't have a bank account. So that was the beginning of my sort of journey into this. And sort of to cut a long story short, I set up one of Hong Kong's first internet service providers in the early 90s, actually in 93. I set up one of Hong Kong's first web computer, basic, what would eventually be cloud computing, but at the time they were called application service providers in 1998. That sold to IBM eventually to become part of Lotus Notes cloud services. And then I came back into gaming because we had an enterprise non-compete with IBM for 3 years. And the App Store had just launched, and the mobile phone was sort of really emerging. I was using an iPhone. I was like, hey, that's a pretty interesting device. This was 2008, 2009. And so we built one of the largest mobile game companies in 2011. And there's a relevant story here because we were one of the top 5 mobile game companies in 2011. And in 2012, Apple deplatformed us because we had 12 out of the top 20 apps. And we discovered that if we launch a lot of apps quickly and we would cross-promote, then we would have a way in which our apps are always at the top charts. And at the time, discovery was that way. And you'll find headlines on Animoca in the early days, being a big player. And Apple basically, without calling us, without sending us a note, basically just said, we don't like this sort of Chinese Hong Kong-based company that's basically sort of dominating the App Store, polluting it from their perspective, and just removed us from the App Store, just like that. Over hundreds of apps were removed overnight, and our entire business was up in the air, right? So I share this only because the history of sort of my background in terms of technology in the space, plus the risk of deplatforming or the fact that we exist on platforms, is one of the big reasons why we basically building so heavily in a decentralized space, in blockchain, and in particular with NFTs. So it's not just a business, it's a passion point for us as a company.
Wow.
So yeah.
So you're clearly a pioneer in the space, right? Perhaps just like, can you give us some examples about brands in your portfolio and really projects that you are having?
Yeah.
in your group?
So, I mean, maybe the best way to do this is to sort of illustrate this maybe with a slide, because that is probably the easiest way to take a look at some of the brands we're working on. And so you can see from here, you know, some of the global brands. In fact, actually, there's over 300 brands that are now working with Animoca brands today. And so the history of Animoca brands is that we had already worked with famous IP to make traditional mobile games. So it was fairly straightforward for us to have a chat with them about sort of NFTs, and you know, they didn't know anything about it, especially 2 years ago. Like, what's an NFT? But you know, we have worked with them for so many years before. So having a conversation around, oh, it's just another way of having digital ownership, but it's still digital IP. And so, of course, we do have to explain it, but generally speaking, it was easier for us to have it. So I think today in the NFT and blockchain space, we probably have the largest collection of IP of anyone. And we're continuously growing to build that. And I think the other thing to sort of maybe sort of indicate on this one, which I think is also good to understand, is that we actually have, let me go here, yeah, we actually have over 50 investments in the NFT space. And so when we work with the brands, we don't just work with the brands with our own portfolio, we also enable our existing portfolio. And again, this is an important thing for us, where I would say we are different from, you know, from the traditional zero-sum building of an ecosystem, as in we don't want to dominate the space, we want to grow it, because in a decentralized fashion, we actually win if everyone else grows, not if we are the only ones or the biggest player in the field. And so we keep investing in that space. Of course, the investment portfolio has done very well because we started investing in 2018. And so we got in early with Dapper Labs or in Bitsky or in Axie Infinity or in Wax, or, you know, all those guys that you know as well. And so obviously, you know, that portfolio has done well. And all of our IP is collaborating with those projects as well. Like with MotoGP, we're building on top of Flow. You know, with Bratz, we built on top of Wax, right? You know, and of course on Ethereum, we're doing Formula One. And on Polygon, we're doing stuff with Formula Rev. So there's a lot of things we're doing across all these parties as we help grow the ecosystem. So I think in that sense, we are different from, you know, your traditional sort of startup company.
Yeah,
that's fantastic. Thanks. That's really, really helpful seeing all those brands. I think, you know, we've already just jumped into talking about kind of decentralization and NFTs, and I'm aware that a number of people on this call may not be so familiar with this terminology. So maybe we can kind of take a bit of a step back and talk in simple terms. You know, what is a non-fungible token, which is an NFT, and why are they important?
Great. So first of all, I think a non-fungible token uses the same technology as you know, Bitcoin or Ethereum, essentially the decentralized ledger, as a way to prove the authenticity of the digital asset. The difference between that, though, is that it proves the authenticity of a unique asset, you know, regardless of whether this unique asset is sort of maybe even similar in look or perhaps even similar in value. Each token is unique. And I think the way we should think of that is it's a way of a digital representation of the way that we interact with physical objects today anyway, right? So if you go to, and buy a wedding ring, for instance, in Tiffany's, the wedding ring has the same price all around the world. And in some sense, you could say wedding rings are fungible when you buy them from Tiffany because they're all the same price. But the thing is, the association with that ring becomes unique the moment you purchase it. And that actually is a non-fungible relationship with that ring because it's your ring. And that ring has your memories. You know, the memories with your wife, or maybe it's your wedding ring from your great-grandmother that was inherited. You know, again, the silver of the ring that it's made in is not particularly valuable, but the memories and the attachments and the uniqueness is. And that is what we should think of as non-fungible tokens, as in the reason why people are fascinated by them is because now we can have these kind of relationships with digital assets. And these digital assets can be in the form of video game items. They can be, of course, most recently, in the form of art or collectibles, but we can have emotional attachments and the kind of sentimentality that we attach to physical things now to digital things. And that is really where I think non-fungible tokens become very powerful as a concept. And the distributed ledger ensures that you truly own it.
Fantastic. And yeah, just to put that into context, so a couple of weeks ago, an artist called Beeple sold a piece of digital art. It was purely digital, and he sold it for $69 million. And that, I think, that made headlines around the world, but is really just evidence here that people are valuing NFTs. They understand that it is a unique item, as you say, and there can only be one owner of that piece of art, even though, you know, everyone can you know, go online and can look at the same piece. I guess it's kind of like you can have a poster of the Mona Lisa, but there is only actually one of them.
Correct.
So maybe we can kind of go from there into talking a bit about gaming, because obviously kind of gaming is something that you guys have, you know, do a lot with as well. So how do NFTs fit into the kind of the gaming ecosystem?
Well, I think one of the things here, I think this would be quite helpful here. So just put up this particular slide here, because one of the things around gaming here, which I think is so critical, is that actually last year already, $100 billion was spent on virtual goods already, right? So that's a lot of money, and people sometimes need to be reminded that the video game industry is actually larger than film and music combined at $150 billion, actually more last year. 2.7 billion people play games and interact with a form of virtual goods existing already in a kind of virtual universe. The difference, though, is it's entirely a rental economy. And so one of the reasons we decided to focus on gaming as a way to bridge and bring the NFT, digital property rights narrative to, is that gamers actually need this more than most people we think. Because when you buy a virtual good, you ask your children, oh, you just bought a virtual sword, or you just bought some skins at Fortnite. They don't think of it as rental, right? It's not the same as renting a tux for a prom night. They actually think they own it, except when it comes to the point of, oh, actually, do you own it? And there's actually an interesting court case that's happening right now in China between Tencent and a digital goods item trader. And they're being sued right now by Tencent because Tencent is saying, you're not allowed to trade player goods because they're not owned by the players, they're owned by Tencent, according to the terms of services. And that is true for every game that's out there. So why we're doing gamers is because we think that the narrative and the ownership structure of having your actual goods really owned by you is one that would completely break the gaming system as it is and actually liberalize these, what we describe as feudal economies, which is what the games are today. The other thing, though, is in order to make sure that it can be kept honest and true, is you need to have an independent layer, right? Our relationships in the physical world is I have a contract, I have a judiciary, there's an enforcement mechanism, there's a legal structure. But in the centralized platform world, that legal structure doesn't exist. It's up to the good graces of the platform, which we know have abused it many of times. So that's why blockchain is relevant, because it creates that secure and immutable layer. They may not honor your ownership of the asset, but at least you own the assets themselves. It allows, therefore, people and players to move wherever they want with their assets because it's their property, right? I think that's a paradigm that is often not understood, because when you have the ownership of this paradigm of these assets, it actually also allows you to take these assets somewhere else. And this is the part, interoperability, which often is debated as something that isn't maybe as relevant, but I think is perhaps the most important piece when it comes to NFTs, not just in gaming, but in general, which is the ability to take these objects and assets to third-party places. Now, in the game context, that means if I have a virtual sword, I can take it to another game. By the way, nobody said that the virtual sword had to be a virtual sword in another game, right? All it really does is it creates a P2P relationship, a peer-to-peer relationship between the owner of the assets and the owner of, someone who makes the game content or so on. I just have the ability to bring it in. The broader context of gaming and NFTs to look at is open digital assets, meaning we think that NFTs are going to do to digital assets what open source did to code. And I think this is the big picture. And gaming is, we think, the natural narrative, because people can build worlds on top of other assets and create new universes that take advantage of them. But the context to understand and why we think this is so exciting as digital property rights is that, similar to open source, the value and the services that are being added on top of this new code that was never designed perhaps for the purposes it ended up morphing into is one that is now opened up to the world. And open source grew in this incredible force, of course. Everyone has to use it, right? This incredible intellectual force that, however, is only available to people who know how to code. So only the beneficiaries are the ones who understood the industry and the single-digit percentile of people who know how to code well. The rest of us were generally excluded from it because we don't know how to program, right? With digital assets, though, it's much broader, as we have seen with the physical asset world. So this example, and then sort of I'll close after this on this one, is one that sort of I often illustrate around what it means when you have an open digital asset, just as our relationship is with a physical asset. You know, the sale of a physical car is but a small portion of the value chain that is generated around ownership of cars. When you think about the fuel that is spent, the roads that is built, the drivers that you have to hire, the mechanics that you bring in, the accessorization of cars, and on and on and on, right? Those industries are significantly larger than the pure sale of the car itself. Because I don't need to go to Tesla and say, am I allowed to paint the car? Am I allowed to be a driver, please? Can I actually build a road? Is this kind of fuel okay, right? These industries around it have formed because of the car manufacturing and sale. And the cars become valuable because of the utility generated from third parties. However, these third parties don't need permission to do so. And in a digital world, everything we do is permissioned. We have no ability to do anything, which means economic substance and value is completely locked, right? But when you unleash it, which is what NFTs will do because they deliver property rights, you'll have a complete revolution in this area. So we think this is the space that NFTs represent, and gaming is the tip of the spear.
Fantastic. Yeah. So I mean, maybe just to go a little bit more technical now, you know, when someone goes into, you know, a World of Warcraft or some game, effectively what they're doing is they're going onto or into the kind of the database environment of the host company. So you have a gaming company that is hosting the game, and then everything you're doing, you're kind of within their ecosystem. It's like you've gone into their house, and while you think the sword that you're holding is yours, because you're in their house, it belongs to them.
That's correct.
Now in the blockchain world, you know, it's quite different because these platforms like Ethereum are entirely decentralized. There is no single owner, and so as a user of that platform, you know, it's kind of like this open world. You're now in the world around you. There is no kind of centralized body that controls who owns what. So I guess maybe a question for you then, you know, as you guys are building, is there a particular platform that you're building on top of, like Ethereum, or are you looking at a range of platforms?
Yeah. So our view on this one is we're building on all chains possible, right? And the reason we're doing this is because we think it's not just about decentralizing a chain, it's decentralizing all chains, right? And the relationship of the assets, because we think the focus on NFTs anyway, and our relationship with property is that the center of the experience should be the property and not necessarily the platform. In our view, platforms are valuable commodities, right? In other words, you know, they become valuable through the way that you interact with the network effect of the platform in and of itself. But we think it's very important that there's many of them, right? In the same way that you can look at it as a relationship with, you know, doing business in a country, right? So, you know, you may do business in Switzerland, in Germany, in China, or the US, right? And if for whatever reason, you know, you may not be liked within that country, right? You have the choice to go to another one. I think choices is a very important thing for the future of the world, generally speaking, and what the promise of decentralization. And one of the challenges is that if you have one chain that is too dominant to the other one, then actually you start getting built on rules from those, because it's not only the fact that it's decentralized and true ownership, it's also the community, right? What is a chain after all? It's a strength of that community. And we see this today, right? You know, Bitcoin maximalists versus Ethereum heads versus people at Tron versus people at Binance Smart Chain, right? I mean, it's almost like in some cases, a territorial war that's going on in some cases, right? The point is that if you are out of favor with one group of people, call it community, country, chain, you know, whatever you want to use, as a person, you as a creator, as a builder in the space, you need to have the choice to go somewhere, right? And so I think that's why we have been very specific around making our assets available across every chain. And we actually think this is the best outcome for at least builders and creators, because we have choices. If we don't, then we get to a sort of quasi app store scenario. And of course, that's not what anyone in blockchain wants to see, but invariably might be the risk. So from our perspective, multi-chain approaches is healthy.
Maybe just on that, do you think at all about building your own chain for specific games?
No, I don't think we need to do that for us as Animoca. That is not to say that we are not necessarily considering some kind of token structure around something around, for instance, the way that assets are held permanent or whatever. But when it comes to building sort of a layer one, right? There's so many people, so many smart people building layer ones out there. We've decided to just work with them. because it's a completely different business, right? But that doesn't mean, like, for instance, all of our own games, they do have tokens, right? We have the Sand token, we have the Rev token, most recently Gamey and Tower, and they've all done fairly well. And they all have their particular use cases where they become relevant to the particular ecosystem they're building into. But we don't need to have our own layer one at this point. I don't think so.
Yeah, I think that makes a lot of sense. And like you say, it's a totally different skill set to kind of be working on consensus algorithms versus, gaming assets and NFTs. Maybe
I think for us, maybe just to close on this one, I think for us, we will play a much more valuable role in working with those layer one chains as to what is needed to make it a better ecosystem. And I think with the power of the portfolio we have and the power of the brands and the users we can bring into the ecosystem, I think we will be more effective in influencing them, which is, by the way, why we make investments in them, right? We're a big investor in Flow, we're a big investor in Wax and in Matic, and well, now Polygon. We hold the various tokens for that particular reason, because when we decide we build in them, then we're going to go and hold some position in them to make sure that we benefit as well. So we have a strategy around building and benefiting from it as a group.
Fantastic. So you mentioned there that you have a number of different tokens within kind of different kind of portfolio companies. Can you talk a bit about the kind of business model attached to having a token?
Sure. So I think when it comes to the business model of the token, generally speaking, the token, we view it as the sort of fungible bond that connects a community. So it's not so much to be thought as a product, but as a way in which a community can glue together. In a way, how sort of, national currencies, for instance, sort of connect a country, right? Whether it's through trade or relationships or some kind of economic substance, we think of the same way as the utility tokens that we launch for our games. And the primary purpose is to be used inside our games. Like for Sandbox, it's to basically build NFTs in the Sandbox game, to buy virtual land, right? It's used as a kind of sort of currency. But for other ones, like for instance, what we did with Tower, which is Crazy Defense Heroes, that token is a governance token, right? And it controls the way that you can direct how the game is being used. And the interesting model is, for instance, in Sandbox, we did use it, and often many people do use it as a mechanism to raise capital, because it's a way for investors to obviously make a return potentially, but for the sort of game company to raise money. So it obviously, in some cases, is used as a money-raising potential. But for instance, with Tower, we never did a pre-sale. The only way, and this is, I think, a perfect illustration of how tokens could be used, the only way to gain the Tower token is to play the game, and you earn the token, right? Now, that is essentially this equivalent of mining, right? So instead of CPU power, it's, play power, if you will, right? And the more I play, the more tokens I get. Now, in a normal circumstance, you would say, well, if I actually just keep making sort of tokens and sell them, wouldn't that just mean that the token will just drop in value? Theoretically, except that the owners of the token now get to decide the future of the game. So in that experiment, which has turned out to become like $1 billion experiment suddenly as well, right? Clearly enough players don't want to sell the token because they love the game. And they want to make sure that they have a voice in keeping the game. Whereas some people need to make it money, or some people need, so an economic framework started to build in a free-to-play economy, which would normally not be compatible with a system, a true economic system that we want to build with blockchain. But I can't transport this same token to another game because it's tied to the universe of that community. So that's also one of the reasons we say that most games will need their own tokens. And often you will hear stories about companies saying, oh, we're going to be the master game token. And we're like, I don't think that works, because the community is a different one. The framework of the use of it is a different one, right? That doesn't mean you can't have an exchange value, right? But I think the idea that you can have one master game token is really ultimately one where we again go to this concept of sort of trying to be a central platform, right? Which I think at least we are trying to resist. And so we think, kind of like, since we're in China, like let 1,000 tokens bloom type of thing, right? Sort of bring it out to everywhere. And I think that is how we view it anyway.
Oh, okay. So Yat, in terms of competitive landscape, the NFT space is incredibly hot right now, right? So who are Animoca's main competitors, and kind of, are you afraid of them?
Well, maybe it's good for me to maybe bring up this chart a little bit more in detail. So are they competitors? Yes, but they're also friends, right? In the sense that we've invested in almost all of them. And that's, first of all, in 2018 and 2019, I would say that, of course, there weren't many NFT investors. It was kind of a lonely field. So it was easy to get in them. So there's a bunch of new companies that have emerged, obviously, that, I'm starting to hear about NFT projects I've never heard of before, which was, something that didn't happen to me before. So clearly the space is expanding in a fast way. And in the last 3 months, I'm seeing a lot of new NFT experts emerge that I've never heard of before either. So I would say just do your research and homework. But generally speaking, I wanted to share this because I had a history with this back when the mobile gaming days in 2011, when we were one of the leaders in the space. We raised money from traditional VCs, good VCs like Intel, IDG, Excel. And similar to then, we were a market leader. And I had an opportunity to invest in many of sort of the smaller companies at that time because, they looked at us and said, oh, can we work together? Because of course, at that point, they could benefit from us. And we said no. And the reason we said no is because our VCs generally took the view, which I understood to be sort of the business model, that, don't enable them, basically sort of kill them, right? Because it's a more classic zero-sum thinking. And, much to our regret, we went in that direction. And, the fact that we got deplatformed probably emphasized the issue. But even if we were not deplatformed, what ended up happening was many of those companies were very successful afterwards. And as you look at the gaming industry, you can tell it's not one big unicorn. It's like over 100 of them, right? And many of them we could have participated in them. And what's different about this is, the other thing for us is that we were unable to obtain the intelligence that we can get from these relationships, right? So many people don't know that Tencent is probably the largest game investor in the world, right? They only know of the big successes, but actually they're the biggest game investor in the world. And they're not just doing it because, they want to make money from it. They're doing it because they gain perhaps when it comes to free to play, traditional mobile gaming, they have the best intelligence in the world and the best relationships and the ability that if something looks like it's doing well, not only to put in more money, but maybe to acquire it, right? Which is what happened with Supercell, or with Riot, or with Epic, or with PUBG, right? And so you could see that Animoca Brands, even though its operating business is of course the larger part of the business, that's the strategy we're pursuing as well, right? In terms of making sure that we have a portfolio view of the world of NFTs and blockchain gaming. So we will continue to make these investments. So are we worried about them? Well, in one way, if you grow the NFT space, then we all grow together because we have a macro perspective on this. At the same time, though, we're close enough with them. Some people might say, oh, Dapper Labs is a competitor, but we work with them closely. Our MotoGP sells out like in minutes when we sell stuff on Flow, and we both grow together. So I think that in this ecosystem, that while there's competitive pressure, always, I think our strategy in attempts to sort of inoculate against sort of the single game, single product risk, and instead has a sort of broad review, a broad approach to everything.
Yeah. Okay, and so what excites you most about Animoca's future? What do you think is there beyond what you're currently doing?
Well, yes, there is a lot of things that excite us, right? First of all, let's talk about macro first. There's only about 700,000 people that own NFTs, right? I mean, just $2 billion of sales that happened in the last quarter over a user base that is still less than 1 million. So unless we think that NFTs is a sort of, has a max cap of, a few million users, which we don't think is the case, the growth potential for NFTs is still going to be very, very large. I think the other thing to understand is that not every NFT is going to be super valuable. I think the headline was caught by the Beeples and our F1 car or whatever. And these are very, very special, valuable deals that have gone out there, just like a Mona Lisa or a Picasso painting, right? But the majority of these assets won't be very valuable. They'll have utility. They'll be used in the game or they'll be used in some form or fashion. I think what Uniswap v3 has done with NFTs is very interesting too, right? I mean, you basically now have a demonstration of the use of an NFT that is used as a contract, as a unique contract with a unique pool, which can be traded. So I can buy that contract and I can own what's in that pool, right? So NFTs are not just simply limited to the object that's there. The two areas that really excite me about the future that we are trying to build, but is one that we have to start with the sort of gaming metaverse, is a kind of understanding, right? So I think of ourselves as living in a feudal society, right? In the digital context. You know, we are ruled by Facebook, by Amazon, by Tencent, by those guys. And we exist on their platforms at their pleasure, really, because they could just get rid of us at any time, right? And then we go around and tell people, oh, you need to have your digital rights, right? You need to have your data, you need to have privacy. It's very hard. I have this image of us going around medieval Europe and saying, you have your ownership, have your property rights, and the peasant in the land, farming the land is like, what, I need that. I just do my farm my land, just go away, I don't care, right? You know, why do I need to spend capital and own land? That seems like a silly concept. That's kind of where we are today. That's why NFT ownership is so small relative to the rest of the digital world, because we don't have an understanding that actual digital rights is important. You know, if we thought, you know, we talk about privacy and digital rights is important, but if we actually thought it was important, why are we still using WhatsApp, right? The whole world knows that using Facebook isn't safe or secure, but we still use it because we don't value it, because we don't understand actually what the true intrinsic value is, right? It's almost like, you know, democracy and freedom. We don't, some of us really understand why it's important. Most of us kind of sort of do, but we don't, you know, we don't vote, or it's like, okay, it's going to happen, right? Because we don't have a true intrinsic value of what that is. And that's why we think gaming and NFTs is important, because you do appreciate intrinsic value of an asset, right? Our virtual land sells well, and people understand NFTs as a form of digital ownership, because I understand my own property. Oh, my own land is worth this much. Therefore, could a virtual land be worth something? Or could my virtual time be worth something? So the first paradigm that we're excited around is to really use NFTs in the sort of gaming context as a way of educating actually what is a digital property right and why is it important? Because it then makes all of us respect our value more, right? And will therefore also fight to protect that value, because now we have something to protect, which before we're like, I don't care. So, you know, I'll just give it to, you know, Facebook or something, right? So that's the first part that we're excited about building the future. The second one that we're really excited about is what it means for the future of broader financial education. Because when you have property rights, actually you with it have to understand the context of value, right? Which is, as we know today, of course, is how the world works, right? Is how we somehow function, since we're generally capitalist societies for the most world, unless you want to live in North Korea. But the problem is that we don't teach any of that in school. And so what happens is that by the time we get into college, and a lot of kids are in debt and all that kind of stuff, they have no construct of value or money. And I would argue that 99% of the world is generally unbanked. I don't mean that in the sense of having a bank account. I mean that in the sense of financial education. You know, how many people understand yield? People, you know, I have to explain liquidity pools. Yes, it seems like an alien concept for many people because we don't even know what that is, right? We don't understand yield. You know, all things that maybe everyone in this room here understands very well. The vast majority, business professional, artists, creators, all those guys actually don't understand it. And so the argument has been, oh, you shouldn't need to understand this because actually, you know, give it to the professional to handle, and we'll go ahead and you just focus on being creative, or you just focus on doing this. I think, honestly, I think that's bullshit, because what we've done is we've created information arbitrage, and the people who benefit and create, frankly, a dishonest framework are the ones who profit from that arbitrage. And we've seen this time and time again happen. So I think the whole point on this is that it broadens our financial awareness. Now imagine all of our children play games, they learn about value, they learn about money and ecosystems and our financial economic substance, you know, when they're 8, 9, or 10. You know, by the time they go to college, maybe they have a portfolio, maybe they can pay for college. At least they know about value and money systems. It also means the liquidity of the world will change, because now I can actually give money responsibly to people. You know, we have to go through these sort of awareness exercises because the vast majority of us don't understand how to invest. What happens if most of the world knows how to invest? What happens to sort of the opportunities in that space? And, you know, the way I see this is I think this is the way the world has to go, because we know that labor is going to be worth less over time. That's just a fact, right? So it's capital. So how do we introduce more capital to the world? It has to be through another medium. Maybe it's digital capital. How do we introduce digital capital to them? Well, they have to understand what that is first. It's financial education. So I think this is the whole context around where we think NFTs can build and really change the world.
Well, thank you, Yat, for this introduction. As always, it's great and inspiring to speak with you. You're a true pioneer in that space, clearly. And we have now 15 minutes left for a Q&A with our investors. So we have dialed in 47 people from within our LP circle. They are coming from all around the world. We have people here from North America. We have people from Australia, from Asia, a good part. So